The price tag comes first, before the dream, before the job, before the future. A number printed neatly, too big to understand at 18. You're told not to worry. Everyone does this. It's normal. Sign here, initial here, you'll pay it back later. Later sounds far away. At that moment, it feels like a door opening, a clean door, a bright door. But it's actually a funnel, wide at the top, narrow at the bottom. And once you step in, turning around is hard. The student loan system didn't grow by accident. It didn't explode because education suddenly became better. It grew because debt became useful. To understand why, we have to go backward. Decades ago, college wasn't a luxury product. It was boring, cheap, unremarkable. A public university charged prices that matched wages. One job could pay tuition. Not a great job, just a job. Students graduated owing nothing, or almost nothing. Debt wasn't part of the story. Then something changed. Governments started stepping back, quietly, slowly. Funding dropped. Budgets tightened. Universities didn't shrink. They expanded. New buildings, new departments, new administrators. Costs went up. Instead of stopping, colleges raised prices. Instead of saying no, banks stepped in. Here's the trick. When prices rise, but buyers can't pay, sales should stop. But student loans removed the limit. If you can borrow anything, prices can rise forever. Tuition didn't go up because education got better. It went up because loans made higher prices possible. A simple loop formed. Colleges raised prices. Loans covered the gap. Students borrowed more. No breaks. And the borrower was always young, inexperienced. An 18-year-old signing a contract that can last 30 years. No collateral, no escape. Student debt can't be erased easily. Even bankruptcy struggles to touch it. Why? Because this debt was designed to stick. Education was no longer the product, debt was. Loans were bundled, packaged, sold. They became financial assets. Money flowed upward. Risk flowed downward. Here's where the trap tightens. Graduation day arrives, caps fly, photos are taken. Then the bill shows up. Monthly payments, interest ticking. You look for work. But the job market changed too. Degrees became common. Jobs didn't multiply at the same speed. A degree stopped being a bonus. It became a ticket just to enter the room. Wages stayed flat. Rent went up. Healthcare went up. Debt stayed. Now the loan isn't just a payment, it's a weight. It affects every decision. Where you live, what job you take. When you marry, if you have kids, you don't chase the best job. You chase the safest one. You don't take risks. You avoid falling. That's not education freedom. That's control. A controlled workforce is predictable. Predictable workers don't strike. They don't quit easily. They need the paycheck. This is the quiet function of student debt. It keeps people working, keeps them paying, keeps them still. Not smarter, just occupied. And here's the part no one says out loud. If education was truly the goal, failure wouldn't be punished so harshly. If learning mattered most, debt wouldn't follow you for life. The system doesn't ask if the degree worked. It only asks if you paid. Drop out, pay anyway. Low salary, pay anyway. Economic crash, pay anyway. The risk was never shared, it was transferred. Students carry it, families carry it, entire generations carry it, and the economy adapts around their limitation. Less spending, less mobility, more delay. Homes are postponed, businesses are postponed, dreams are postponed. Debt stretches time. You're always living a few years behind where you thought you'd be. Now zoom out. Who benefits from this? Universities get guaranteed money. Banks get guaranteed payments. Governments get educated workers without fully paying the bill. Everyone wins, except the student. That's why this system survives criticism. That's why it grows. It's profitable. And because it's framed as responsibility, you chose this, you signed the contract. But choice without context isn't choice. Teenagers don't understand compound interest. They don't understand labor markets. They understand pressure. Do this or fall behind. That's the message. So they sign. And decades later, they're still paying for a decision made before they fully understood money. This isn't about bad students. It's about a bad design. A system that rewards lending, not learning. A system that grows when costs rise. A system that turns education into a toll road. Pay to enter, pay while inside, pay after you leave. Even now, fixes focus on symptoms. Lower payments, longer timelines. But the balance remains. Stretching debt doesn't remove the trap. It just makes it quieter. The real question is simple. Why does learning require lifelong debt? Other countries figured this out. They fund education directly. Costs stay low, outcomes improve, but here the debt model stays. Because it works. Not for students, for the system. So when someone says student loans are about opportunity, listen carefully. Opportunity shouldn't come with chains. Education should open doors, not lock you into payments. The student loan trap was never really about education. It was about control through debt. And once you see it, you can't unsee it. The takeaway is simple. Debt shapes behavior, and systems built on debt don't aim to free you. They aim to keep you paying. If this made something click, share it. Question the story you were told. And remember, real education should never cost your future.